Success in the housing market is all about luck and timing and patience.
That's right. Even after saving up for a down payment, some prospective buyers are putting that money off to the side until mortgage rates cool down. Well, this week, the average rate for a 30-year fixed mortgage rose to 6.94%. That's the highest in almost 2 decades. Mortgage rates have more than doubled since last year, when the average rate for a 30-year fixed mortgage was just over 3%. So let's bring in James Faris, an investing reporter at Insider, to talk about this a bit more. James, welcome. Thanks very much for being with us. So let's say that you saved up for a down payment, but decided, now doesn't really feel like the best time to buy. Where is the best place to put that money for the time being?
Yeah, so the people that I talk to would recommend a few different places. Number one, cash is always a solid option. During inflation, it might not be ideal to see your purchasing power decline steadily, but it's certainly better than losing 10 or 20% in the stock market. Another possible option is a high yield savings account that can yield anywhere from 1% to or even 2.5% on your money. It's very safe and risk-free as long as you're with a reputable firm. And it's a better option, certainly, again, than the risk that stocks and even bonds have brought this year. But I would say the best option from the people that I talk to would be high quality dividend stocks. They tend to do well during periods of economic volatility and even a recession. And you get paid to wait. And that's the beauty of them. You get a yield, it's steady, it's reliable. And whether they go up or down, you'll still be getting that solid yield.
If you're a prospective buyer who's got one of those pre-approval letters they can wave around and you see houses come up on the market, any harm in continuing to bid, maybe underbidding, seeing if something comes through that could work in your favor, these high mortgage rates, right?
It could, Tony. And I talked to a source the other day, Matthias Holsey of UBS, and he said that normally trying to time any sort of market, especially the housing market, is a really bad idea. I mean, normally, unless you have a crystal ball, you just end up getting burned. But he said right now, it actually might be a good idea. That patience might pay off. He said, and this is his personal view and not necessarily his firm's view, but he expects that US home prices could fall 10 or 15% in the next year, maybe even 20% if demand continues to soften, if supply continues to come online, and as you mentioned, mortgage rates continue to skyrocket.
So, I think people watching might say, that's really tempting, 10 to 15% lower, possibly 20% lower. I know you say that you can't necessarily time the market, but what are the factors that people should consider if they're looking to maybe jump in and they say, I need to get in on that. I'm not sure how long this kind of fall in prices is going to actually take place. Like, how long is that going to last? So what would you say to someone that's potentially looking to jump in? What are the factors that they should consider?
The first thing I would consider, Elaine, is number one, are they looking to live in that home? And most people are, I would assume, if they're a family. There are some people who are home flippers or investors. And from that perspective, they can be more inclined to wait. What I heard from my sources that I've talked to is that for a family, you might not want to get too cute and wait too long. If you've been looking for your dream home for a year, even longer, if you see a good opportunity that can fit your budget, that you feel like is affordable and fair in an area you want to live in, good school districts, and those other factors, if that all aligns and you see a good deal, it might be a good time to pounce. If you're someone who is in a decent renting situation, it does depend on the person's situation, but if there is not a super high pressure, then I would say it can make sense to wait, certainly for home flippers who can try and time the market. But in general, for a family, I think if you've got your family of 4 or family of 5 cooped up in a little apartment and you've been waiting for a place and you finally see a house you like in that neighborhood, it might be a good time to pounce on that.
Yeah,
because timing the market is impossible.
I interviewed, James, a family in New Jersey. That is exactly what they've been doing, is they've been looking and looking. I think they're now on their 2nd year of looking for a house, and they haven't been able to find one that meets all their criteria. So I'm thinking of them when you say, cooped up in an apartment. That's exactly the situation they're in right now, and a lot of American families are in.
But if you're thinking you've got the money and you're going to live somewhere for 20, 25 years, 10% difference in the long term may not be that big of a deal. You want to be somewhere.
That's right. A lot to consider.
Yeah.
Absolutely, Tony. I talked to someone a couple weeks ago, and he said the best time to buy a house was 10 years ago. The exception of the financial crisis, of course, but over time, real estate is one of the only assets that you can generally count on to go up.
Yeah, we hope so. James Faris, thank you very much.
Thank you for having me.